Abhishek sir, we are live now.
Okay. Good evening, everyone, and thanks a lot for joining again. This is Abhishek Mehrotra, Head of Investment Products with HDFC Securities, and we are very happy to host Mr. Gopal Agrawal, who is the fund manager, senior fund manager with HDFC AMC. Mr. Gopal has almost 2 decades of experience, and he has worked with prior to HDFC AMC, he has worked with SBI, DSP, Tata, and Mirai Global Investments. So, Gopal, before I go on to the core topic, almost all the investors who have joined will definitely want to know what's happening in the market. Why such kind of a U-turn, or because almost all indices are down 7%. And though at an index level, it may look 7%, but in the portfolios, it look fairly very different. And when client goes, script by script, there is more bloodbath visible in the portfolios. So, Gopal, can we have some words on currently what the market is leading to, and how you are reading this correction?
Sure. So thank you, Abhishek, and welcome everyone for this webinar. So I'll just share with you my thoughts on this. That as the market has moved up very sharply, right now market wants to give acid test to the earning actually, because what happened in the near term, market is now actually weighing the earning actually. Wherever there is a short term aberrations are there and weakness in earnings are there, the stocks are getting penalized, because now when you reach market at 26,250, what we saw very near term, now from here onward the market has to move, will be based on the earnings actually. So wherever there was a froth or the earnings have been disappointed, has been brutally hammered. Second point I would like to share with you what has happened. Many of the FIIs are under indexed to their investment in China, particularly the FIIs which have come originated from USA. So what we are seeing, they are also renaming some of the position in the larger cap, and taking the money off the table actually. So these are the two things which are happening. But honestly speaking, that wherever the earning disappointment is large, are getting hammered. But Abhishek, I want to share with you, these days the market is totally different than what we used to see in the past. These days, a lot of hedge funds participation is also there. So any iteration disappointment lead to very sharp move on the market actually. So that is a lot of difference from the past, I would say. But very clearly, in the first half, what has happened, particularly in the first 5 months of this fiscal year, the government capital expenditure is down by 19%. So you can imagine when you had a heavy rainfall, you had a lower government capex, and you had election. Then what happened in many of the sectors? Investment has not happened. The demand was quite muted. I have given you the figure: 19% decline in government capex YOY in the first 5 months, where the number have come. So it's definitely weaker, territory. So if you just take this number and say economy is bad, or the numbers are so weak, I think that's a very myopic view actually. Right. So investor at this point of time should have very strong mindset, and they should feel that earnings are not bad, because the Indian economy cannot have such a poor number what we saw. So as soon as the government capex in second half will pick up, right, I am really confident that earnings should look much better than what we saw in the first half of the fiscal year.
Sure. A follow-up question on that is so now we are already corrected from the peak from 26,000 levels, so now we are at 24,000 levels. And
Yes.
What is the right valuation which you feel, or in past which you have seen that this is somewhere where which will again our markets become attractive? Because currently, if from peak to now, we are almost 8% kind of a discount.
So very clearly, I tell you, the 19 times earning to FY26 with bond yield in India is also, rallied to around 6.85 today, right? And there is a possibility of a rate cut. So bond yields are also, if you take average 6.75% 10-year GSEC in India, right? And, further possibility of a rate cut. So in such a scenario, historical 19 times multiple to our earning looks fair, like a valuation support. So, most of the brokerages are between 1230 to 1250 EPS for Nifty for FY26. So on that basis, if you look, we have now limited downside, if you just go by arithmetic. And what happened, Abhishek, I want to reiterate that what happened in many of the companies these days have very high free cash flow yield and they pay very good dividend actually. So many of the businesses now are becoming attractive, pays over 4% FCF, and which like most of the investor, HNI investor gets when they put money into alternative like fixed deposits of the AAA rated bank on a post-tax basis. So what I would say that, we will see moderate, in my view, most of the thing are getting priced in and some more downside because nobody can know where it will be bottom. But the prudence says based on the valuation, most of the, disappointments are there in the number actually.
Okay, so that will give some relief to the investors who are joining in. And anyways, to all the investors who are listening to this call, I believe if you are invested for long, obviously your portfolio has corrected a bit. There's a drop in terms of percentage gain, but it's not an absolute loss. So one has to look at it that way because market has been flourishing in the last 2.5, 3 years. So you have to take that in that sense. Gopal, before we switch on to the fund, can you tell how do you sense Indian economy going up? Because obviously Q2 numbers was not that great. People were, or the market was expecting, is now expecting great Q3 numbers. But how they are panning out and what are the key things which an investor should see that it gives a comfort that yes, we are going on the right track, at least for Q3.
No, so very clearly, I would say that the government capex needs to pick up. And if you go by the many anecdotal, thing that July and August were quite muted based on the various commentary by the management on the next call, and September has month on month has seen some improvement. And that is a hopeful that with the festive season we are getting into, and the government capex should pick up from here onward post monsoon. So definitely, as on a progressive basis, economy should look better than the first half. That is what I am saying. In the first half, because of major decline in government capex, right, you saw quite muted GDP growth. And the second half should look better. That is the expectation, actually. So, barring any unforeseen, we never know how geopolitical situation which is emerging can play out. But net, things should look incrementally better in the second half.
Right, that is comforting to all the investors. Any specific sector, Gopal, where you are bullish in your fund, which you can talk about, because that obviously gives a guidance that is where you are looking forward for. And specifically, if you can touch upon banking, because that's one sector where the market is anticipating a big turnaround, though the numbers have been coming good from some banks. The number have been really beating the expectations, and for some it was relatively a disappointment, so to say. But how this entire financial sector is shaping up, because that contribute almost 30 to 40% of the index.
So I would really tell you, in primarily the large private sector banks looks quite decent because they are trading at discount to their historical valuation. Second point, the most of the stress in the banking system which we are seeing today are into microfinance lending, unsecured lending to a certain extent, right, and largely into the microfinance related and unsecured. So what happened? The larger private sector banks have lesser exposure to this segment actually, and their underwriting capabilities are far better actually. So in such a situation now, most of the banks are trading at closer to 2 time price to book and 13 to 14 p multiple, so which offers us a reasonable good risk reward actually. So that is there. Second point I would say that is still like the way RBI has tightened the system, we are not seeing major NPA formation in the system actually. Even the public sector enterprise banks are well positioned in this period, because what we have seen, like last quarter, we had a great treasury gain actually because of a bond inclusion and moderate commodity prices and even rate cut by Fed. We have seen great rally in the Indian GSEC. So the public sector banks, book value has gone up, tier 1 capital has strengthened, and they are also not seeing in, because they are not very large into microfinance and unsecured lending space, so they are well positioned. So I would say that larger banks are well positioned, and that looks very attractive. On this insurance side, honestly, India is still under penetrated. We really see a good growth prospect into the insurance sector. But as I said, these days the fund managers are very myopic and they look at what happens, on a quarter-on-quarter basis. So in general, what is happening, most of these nowadays, because of a strong equity market, most of the flows are coming into, ULIP linked products and all, not into the, savings product. So in this, the margins are slightly poorer than the historical. So, so wherever you are seeing disappointment, like reactions are very adverse. But I would say this is very short run, but insurance is also looking quite good, right? So that's my view. But net, the larger private banks are well positioned in this environment.
And look, Gopal, is in terms of your fund, how you are placed in terms of sectors. So apart from banking, which sectors you are overweight or really bullish on?
So I am generally quite overweight on pharma first. If you look at on relative basis to the benchmark, then IT. Then I would say that onto this consumer discretionary, right? Where I am overweight actually. And so these are the three sectors where I'm overweight. And on capital good engineering also equal weight or overweight. I am overweight, including utilities. So because I am very positive on power sector in India. So these are my sector bet where like I'm running overweight actually.
You didn't touch upon IT, so we would like to know what's your view on the IT as a sector.
Yeah,
And
so I said I am overweight on IT. So what happened? As I told you, IT sector throws very high free cash flow, and in general, the companies gives back closer to 80% of their FCF in the form of dividend and buyback to the shareholders. So what happened? This sector offers you very attractive downside protection, right? That is on a valuation side. Second point, I would say, definitely on ongoing basis, IT sector has hit the bottom, and things should start looking incrementally better. Though I won't say like things will improve very dramatically, But what we are seeing actually most of the corporations are getting into cost takeout deal, because now discretionary spend is quite low actually, right? So now companies are going for very structural cost reduction deal. So these are the mega deal, and it will take slow and steady to ramp up. So definite, that is why I'm saying the sector will improve, but you should not imagine or expect very dramatic improvement in the sector. But the best part is that because of free cash flow generation in this sector, right, it provides you very large downside, because the cash in the sector. Second point, what market is also pricing in, because we don't know what will happen, but generally a Trump victory in US in the past, when it happened, there was a corporate tax reduction, right? And most of the corporation use this extra earning for efficiency improvement. So a lot of investment in IT had happened during that period. So that market is pricing in, but we have to really see how things shape up. So that is where we are actually.
Right. And Gopal, what's your view on the digital space? Because there's a lot of companies which are operating through the likes of, say, PB FinTech, or we can talk, say, Angel Broking. And there are a lot of firms which are using digital as a major platform, or Zomato. What's your view on that, and how you approach those as a script? Do you have obviously you cannot talk on a script level, but in general, what's your, because there's a lot of euphoria around these stocks.
No, see, very clearly, this platform-based businesses are here to stay, and because this is the future, as penetration in India is increasing. We have the mobile penetration in India is really very high, and you are slowly and steadily people are moving towards the e-commerce and all. So definitely, these are the good businesses, I would really say. And I also keep a decent portion in my portfolio actually, because these businesses, when they reach a scale, the free cash flow generation is very high, because in these businesses generally the upfronting of costs are there actually, because you build a platform, you do all the marketing exercise and everything. And if you becomes in this business, the only thing is that winner takes it all. So you have to be sure that you are with the winner, because I tell you, the risk of investing in these platform businesses are, if the businesses are subscale, then you will have a tremendous problem. So that is why investors should take limited weight in their portfolio, not very large, because there can be lots of misses also, right? You got my point. So that is where I am.
Yeah, definitely.
Because this is like winner takes it all. This is where we are today. Otherwise, many people will invest in technology and everything, and returns will not come. But if you are a winner, then there is a lot of market cap creation actually.
So before I move on to other few questions which I have, all the investors who have joined either on the Zoom call or digitally, or on YouTube, you can post your questions in the chat. I will try to take as much questions as possible. So while we keep on discussing on the markets, anybody who wants to ask something specific, please don't ask about specific stock, because Gopal is not allowed to talk about stock specific. But on sectors or on economy, yes, definitely we will be happy to take on questions. So Gopal, as you said that yes, you are expecting, because I'm moving more towards earning side. Do you believe Q4 will be a period when we can see probably and better than expected earnings, and some key sectors where you believe this is still a challenge, or something which one should avoid, or you are avoiding for that matter?
See, Abhishek, what is really happening, I tell you, that what I really expect in second half, especially on the capital expenditure side, things should start looking better. Second point, what I am seeing that let's say you have only problem in the Indian equity market, which I don't have answer, is that in the last 2 3 years, what has happened? We got benefited by margin expansion because all the input prices were very low actually, right? And now with China stimulus, which is there, right? And so in such a situation, can commodity prices go up, right? So in many of the user industry, like you may not see the margin expansion what you saw in the past. So this is my, this answer I don't have, but what I am really confident that the overall volume growth will be better in second half than the first half. That is for sure. Second, rural economy will take is likely to look better because of better monsoon. Second, government welfare schemes, right? And definitely economic activity picks up. So rural economy, and RBI has also a very strong view that in the next two fiscal we will be, very firmly in the inflation band of 4% or so, right? Or below. So if that is the view, then what happened? The rural economy play, which was not there in the economy for last 2 3 years, should look better. So that is for sure. Second point is that in the near term, in the last 1 year, what has happened? The IT sector had a net headcount reduction, so which had an impact on, which is now we are seeing the impact on urban consumption to a certain extent actually. So if the IT sector looks up from here, right, hiring again starts in this sector. So the urban consumption, which everybody is now little cautious on, can look better in the years to come, right? So my whole point is that we had seen a very tough time in the first half in terms of earning, and it should look progressively better, going forward.
Okay. While we discuss, you said the government capex or government expenditure has been low in the initial half because of elections. Do you see that coming back again, and probably the beneficiaries like PSUs and on the defense side, they could be a rebound, because that's where a lot of a lot of participation has been, and things have turned out differently in last 30 days.
No, see, I tell you, you have to be
Defense
very,
as a sector.
yeah, I tell you, looks, you have to be very specific. What I am really seeing very clearly that in India, let me share with you that RBI is very strict on growth of unsecured lending. They want to reduce it to a certain extent, and you are seeing the impact of this into the urban consumption also. Right. So once we reach to a moderate level, you are seeing in the near term, uh, banks are improving their CD ratio, loan growth is moderating, deposit growth is rising. That you are seeing on an incremental basis. So that is why the urban slowdown is where we are today. Definitely, it's also induced one. So once we reach to a point, then the progressively things will look better. Second point, I would really say that in the near term, in many businesses, you had a lot of let's say inventory losses also, right? Because of volatility and all. So that will look better on an incremental basis from here, and these as the capex will pick up, the volume growth in cement, steel, and other thing, even power demand, because of very heavy monsoon and everything, you had a very weak power demand in first half, which is normally not the case in India, right? Because India is a growth economy. So you should not take everything what has happened like is a ongoing thing which is permanent. So things will look better. Only point I want to convey that many of the sectors valuation has had gone up very high, which may not revert back where it was actually. So some expectation we have to tone down in terms of market return and some of the sectoral stock specific return what we had seen in the past.
No, you are absolutely right. That's very fair to say that, because yes, we have seen the kind of multiples which we have never seen in certain stocks, and that need to get normalized. Do you club, cement sector and steel sector also in that category where you believe probably the demand will go up, or you have a different view on cement and reality or steel?
No, see, I tell you very clearly, like in cement, we had a very weak first half, right? Because of very large, heavy monsoon, and you have an election period. So definitely in H2, the demand is likely to pick up. That is the expectation, because in general, post November 15, when most of the workers come back, right, and the government expenditure should pick up, so things will incrementally look better from where we are today. So the second half should look better in terms of volume. Similar thing is that we are also seeing some uptick into the construction steel prices in India in anticipation of demand to pick up right in India, right, as compared to these flat product, the construction steel prices are incrementally looking better. So this market is also, like to forecast that the pricing in recovery in second half. That is where I am. On the real estate side, I would only say that demand is very good, right? Very strong demand is there, and you are seeing anecdotal things that where whatever is being launched are being absorbed very fast. So
Right.
we are in a very good cycle of real estate for here for sure. And I would only say that this cement and steel looks to be better than the first half actually.
Right, right. So I'll also tell our viewers, though Gopal is candidly telling about the markets, his performance is not that candid. It's an absolutely stunning performance of the fund. All the clients, those a lot of our customers since relate to the market price as they say, bhav, what is the bhav, and that is how they relate. So I'll tell the NAV of HDFC large and mid cap fund, which is one fund which Gopal manages. Today's NAV is 332. 5 years back, same day, the NAV was 109. So if somebody who has invested 5 years back, it is almost 3 times kind of a multiple. And in terms of CAGR, that has been 24.8%. Similarly, 3 years back, the NAV was 190. If you compare from that, it's almost like nearly a double, obviously. That's a CAGR of 20%. 2 years back, this NAV was 196, and 1 year back was 235. So 235, and as of yesterday, it was 332. It's still a 40% kind of a jump in the portfolio, even after this. So all those investors who are at times, there's one or two questions on that too. Mutual fund relatively moves slow, but that's not the case. I will request investors to see at a portfolio level rather than a stock level, because normally there has been a way of approaching stock as an individual level, and mutual fund is itself is a portfolio. So once you see your portfolio and then mutual fund portfolio, that's how one should compare, and one should participate and give money to both. One, you yourself be a player in the market, and give an expert also to participate. So coming back to Gopal, to our discussion, where do you see 1 year, 3 years now, from where we are, how the Nifty valuation will be or Nifty figures will be? So can you throw some light on that? What's the house view?
See, I would really say here onward, no, the P re-rating case is almost we have done with, right?
Okay.
Because you know we have seen like market trading at 14, 15 p multiple, and now we
Right.
have seen market trading at up to 23 p multiple, right? And many of the
Right.
sector, many of the businesses have seen very decent p multiple expansion. So from
Mhm.
here onward, we are likely to move in line with earning growth actually, right? And in some cases, wherever earning growth is strong, you may see some multiple expansion, but not very large, because most of the multiple expansion we have done with. So investors should have toned down expectation for the future, because most of the returns from the market will be it should be in line with earning growth actually. That is the view I have actually.
Okay. So probably a double-digit return is something where people should invest, because the companies which you choose with the wisdom and the team should that's where the earnings growth should be, and more or less the performance of the market is following some way or the other the how the earning paths is. Obviously, it's not a straight line, but yes. Uh,
Yes.
So, Gopal, also tell us, because look, currently from last, I think 1 month, we are hearing huge FII selling, and that is playing over the market. But the way DIIs are participating, and the SIP book which has been created, or with all the AMCs, uh, how do you see this panning out? Will is it the market correction is has got the support, or the mutual fund overall are also just waiting on the sidelines and will participate when the when the FI sellings are over? How you are seeing it at a fund level?
Abhishek, very clearly, like you can see, we have participated, and that is how the selling is being getting absorbed, right? So for a
Right.
matching seller, there has to be a buyer. So
Definitely.
definitely, we are participating. Uh, but what happened in some cases, like where we are also seeing the valuation is quite high, and if somebody is a seller, then definitely you will have a impact, right, on the
Right.
market,
Right.
right? So definitely that is the case, but definitely we have participated. But you have to keep one thing in mind: we are missing one very large picture. What is happening this time, apart from institution like mutual fund and insurance, the HNI, PMS, AIF has become equally or even bigger than the mutual fund, right?
Oh,
Right. So what happened, when this negative loop of market starts, so their deleveraging also may have come. I don't have exact figure, but what happened, like you may see a negative spiral on their portfolio also. And if you see the action of the most of the participant in the market in the last 3, 4 years, nobody has actually done any profit booking, right? And also the leverage position is also quite high. So I don't have exact number to tell you what would have happened in the market, but my sense is that it will also have that effect on the marketplace.
got it. Got it. So, Gopal, during the discussion, you said if Trump comes in, probably market is anticipating there will be some, some positivity towards IT companies and all, with the backdrop that, what else do you see in terms of geopolitical can impact India, and take, for example, if Trump comes into power, or Miss Harris come to power?
See, it is very difficult to predict what this presidency would be as compared to the past, because we are only going by what we had seen in the past, but we don't know what
Right.
would have changed actually, because
Sure.
lot many things have changed. First of all, US is not running the same kind of fiscal deficit what Trump owned in his first term actually, right? Today they are running 6.3% fiscal deficit, right? Right, and bond yields is closer to 4.25, and we don't know if these let's say you have more fiscal pressure than where the interest rate would be. So that's a question. Nobody has the answer, but only people are guessing that what would happen. Generally speaking, during this period, the global trade impacts, and it will have impact on positive impact on lower commodity prices that we generally see when the global trades get impacted, right? So that will benefit the commodity user company, if that happens, because I'm just going by what happened in the past, but the outcome can change, so we have to be very balanced, right? So that is where we are, but I would only say that we have to focus in this period more onto the domestic on our own, because the global trade can get impacted, and so that the like government investment, private sector investment, that will be the key driver for the market, right? And as I told you, rural economy had a poor performance because of very high wage food inflation and everything. Now, as per the RBI itself, they are saying things will look better progressively. So hopefully, the domestic centric sector should be better if the global trade gets impacted.
Right. So I think that is also really very helpful. What So one thing which we have been hearing from a lot of media, and this China playing or probably China being undervalued and a lot of money flowing there. But if one has to put an incremental money, what is your sense? And if the domestic investor who wants to put an incremental money, what is your sense? He should look forward to participate primarily in India, and how he should approach this market. A fresh money coming into fresh money, investor sitting with fresh money.
See, I tell you, because I worked with Mire and invested some money in China during that period. So whatever little knowledge I have, I would like to share that the main driver of Chinese economy was the two. Like one was FDI in China, and second is property development and infrastructure development, right? So now the China has reached to like closer to $19 trillion economy. So, you can't, like, infrastructure development can't drive the economy to a larger extent, because they have reached to a growth,
Base effect, yes.
yeah, very large size. And second, because of whatever happened in their relation and geopolitical thing, like FDI is moderating actually, right? So structurally, like, you cannot bet very large on China, because the size of the economy is 19 trillion, right? So in my sense is that you can have a tactical view, tactical sum allocation, but I fear that there will be large participation in this market actually.
Okay, so that's interesting. In fact, I like to tell our investors, all those investors who are probably participating via SIP mode in large and mid cap fund and the multi cap fund, which is being managed by Gopal. The 10-year performance, I'll not say 1 year, 5 year, because the 1 year, 5 year can be colored with the recent rally. The 10-year performance is also pretty high, and I think I have the numbers. It's almost like 18-19% kind of a CAGR which the fund has given over the past 10 years or so, and that's where one should look into the market. And as said by Gopal, yes, corporates or the stock market will follow the earnings. So it may go up and it may go down, but invariably the direction will be towards the direction of the earnings. To all the investors who have joined in this call, I think somebody missed the initial part where we talked about what is the current market outlook. Gopal shared that yes, they believe that I think enough correction has been done. Obviously, there's no a straight line where it has to stop. But yes, a decent amount of correction has happened, and they don't foresee a huge amount of correction way forward. That's the view coming from Gopal, and definitely they are really very hopeful that probably Q3 and Q4 will come up with rural economy going up and domestic centric companies doing well. Broadly, this is what the construct has been in the discussion. Any last words, Gopal, from you before we end up this engaging session?
So I would only say that first of all, stick to your asset allocation. That is the key. Second point is that don't overreact to to the very short term move, because what we are seeing is structurally for India's context, our current account deficit is moving in a right direction, right? And as per the various estimate, the inflation is also likely to moderate over time. So if you have a longer term view, then we don't have any macro worries, right? As the time passes. So we should use any correction to invest, though with actual focus on your asset allocation.
That is very, very rightly said, Gopal. And all our investors, please note your asset allocation and your risk profile and your willingness to participate definitely should be considered before participating. If somebody is looking forward for some expenses in next year or so, probably equity market is not the right part, right segment to participate, because things are very volatile in a shorter run. But definitely any business or any goal which is 3 years, 5 years, 10 years beyond, this market can definitely help you to create a wealth and do better than their other asset classes. Thanks you, Gopal, and thanks to all the investors. I will also like to wish everyone happy festivities, starting with the next week onwards. We have Dhanteras is coming, then Diwali, and after that there is Chhat Puja. So wishing everyone a very happy and prosperous Diwali and a new Samvat. Also, I've got a lot of questions on a lot of comments on to speak in Hindi. So next session, when we do, we will ensure that it will be a Hindi session. So thanks to all those clients who have taken time and participated in this call. Thank you, everyone, and wishing you great festivities ahead. Thank you, Gopal.
Thank you. Happy Diwali.
Happy Diwali.